This is the Sustainability Podcast hosted by David Daoud of Compliance Standards LLC, an analyst firm that tracks various segments of a sustainable IT. This podcast is dedicated to discussing all things related to electronics recycling, data security, the environment, ESG, product design, and much more. To find out more about the podcast, how to subscribe, and where to listen, visit compliancestandards.com/podcast. Happy listening.
Greetings, this is David Daoud of Compliance Standards. Today is the 4th of October and happy fall season. I will be talking briefly about Ingram Micro filing for an IPO. Admittedly, I was excited to learn that Ingram Micro, or IM, filed for an IPO in the last day of September. Becoming a public company, as you know, would give us better visibility on how the company is performing, but also on how the industry is performing. Even if its ITAD unit is small in comparison to its core business, that's pretty good news. Now, the IPO filing by Platinum Equity would pave the way for the return of Ingram Micro to the public sphere after it left in 2016, I think. In 2021, Platinum Equity acquired it from its previous owner, HNA Group, for I think a little less than $7.5 billion. Now, a couple of points first. Filing for an IPO in itself is not necessarily a guarantee that the company would eventually go public. It has to account for things like market conditions, investor interest, and company performance, which could derail an IPO at any time. But the company already submitted Form S-1 with the US SEC, which signals its intention to go ahead. Still, we know that between 20 and 30% of companies that file may delay or cancel their IPO altogether. Secondly, the time it takes for a company to officially be listed is anywhere between 3 to 6 months from the date it submits its S-1 form. And so any information available to the public coming out of Ingram Micro will likely be published probably in the second calendar quarter of 2025. Now, how going public would affect the company and its ITAD unit? Well, there's no doubt that Platinum Equity, that is IM owner, should expect a significant impact on its ITAD operation, for instance, and broadly, of course, all the operations of the company. Going public is firstly meant to raise money to fund operations and reduce debt. Overall, Ingram Micro has been facing a difficult market environment, just like most of its peers and competitors, such as Aero Electronics and Avnet, who market similar IT solutions, similar products, etc. Now, Ingram Micro has been experiencing a tough environment, evidenced by its filing showing a decline in its revenue over the last 3 years. Last year, the company's revenue stood at about $48 billion, down 12% from 54.5. In 2021, however, the firm produced a remarkable gross profit of $3.5 billion. Now, this year, data shows that revenue decline trend continuing, and as of mid-2024, Ingram's revenue stood at $23 billion, down 1% from mid-2023. But we have to say that Ingram Micro is a behemoth. Its scale of operations, consisting of a presence in nearly 60 countries, with over, I think, 130 logistics and service centers, indicates an extensive global reach. The company reaches more than 160,000 customers. It's selling products and services from some 1,500 tech vendors and OEMs. The company has clearly what it takes to remain a significant and maybe even a dominant player in the IT supplier landscape, which also means that ITAD is most likely a tiny portion of its business. IM sells all sorts of hardware, software solutions that include such things as client and endpoint solutions, advanced solutions, cloud-based solutions and services. And so as it goes public and seeks to raise cash, it could be tempted to sideline its small units to focus on high growth segments, except that when well done, ITAD could be a high-growth business in itself and could be a catalyst to the so-called circular economy that everybody's talking about. Now, on the ITAD front, the year 2025 is expected to be a banner year in terms of investing in ITAD-related M&A, site acquisitions and expansions, infrastructure investments, and IT platform upgrades. IM is no stranger to that and has accumulated skills and knowledge in managing acquisitions. And in fact, since 2012, Ingram spent an estimated $2 billion in buying some 40 business entities, and with a market craving for data center decommissioning, a sustained refresh cycle, a heightened demand for data security and ESG compliance, and a global footprint, Ingram is looking at how to play in those markets in addition to its core business. There's also the need, obviously, to invest in automating its digital capabilities that are used by its customers and partners. And although this may be early to assess, the company has been promoting a mobile application called Xvantage, which is powered by AI, and which suggests that the company is heavily investing in technological tools to streamline operations. Xvantage could be a significant asset in the way it markets and rolls out its ITAD offerings. Its ITAD unit could clearly benefit from the innovations coming from Xvantage by integrating AI-driven processes and enhanced asset tracking, such things as workflow automation, customer service improvements, etc. This clearly align ITAD with the company's broader push for operational efficiency across its business lines. A lot of the classic ITAD functions and the new ones fit very well with the idea of an AI-powered platform. And all of this obviously requires cash, and a lot of it, to develop. With the raising of cash from the IPO, Ingram Micro's ITAD unit could clearly benefit from that with an expansionary plan that some of competitors have already started. There's also going to be greater financial scrutiny that industry trackers rely on to get clean data. IAM's ITAD managers are likely to be facing increased pressure for transparency and cost efficiency as the company opens itself to the scrutiny of public investors. So we do not have clear visibility on debt, and if the company has a lot of it, obviously pressure would mount to use the money it raises in the IPO to pay that debt, obviously limiting resource allocation to, let's say, ITAD expansion. One other factor to consider is the potential for the ITAD units to be completely disregarded if resources are allocated to core activities. We saw that happen with Aero Electronics. We know, for example, when an ITAD unit is owned by a bigger company, such as an OEM, for instance, it's very difficult for ITAD managers to get the attention of the senior executives and the big bosses. Ask many employees of ITAD units owned by bigger companies, and chances are they will likely confirm my assessment. Not all of them, obviously, but many will confirm the lack of attention from management as a major inhibitor of growth. I hope this is not the case for Ingram, but yet again, time will tell. There's also the possibility of shifting priorities, which may actually have prompted the company to go public. If there is a shift in priorities, then profound changes can occur and could affect Ingram's ITAD unit and other units. So what I think is that while Ingram Micro's next step post-IPO will determine the extent of the changes that will affect the companies in general, I have some high degree of confidence, perhaps even hope, that its ITAD unit will come out strengthened instead, just as Iron Mountain and other IM, by the way, has been demonstrating. There's plenty of positive momentum in the ITAD sector that is not only benefiting Iron Mountain's ITAD operation per se, but it's also likely benefiting the company's core activities revolving around such things as information management, secure storage, and shredding, data centers, cloud services, information governance, etc. Iron Mountain's success, as far as we see for this year, is not just about how to pick the right companies to acquire and go through a meticulous integration phase, but it's probably more importantly on how to have an effective go-to-market strategy that optimizes sales and marketing. If done right, I'm willing to bet that Ingram Micro will provide the right resources to its ITAD managers to compete in a sector that everyone is monitoring. Until our next talk, thank you and goodbye.
You just listened to an episode of the Sustainability Podcast, hosted by David Daoud of Compliance Standards LLC. Send us your feedback at inquiries@compliance-standards.com. More details on this podcast can be found at compliancestandards.com/podcast.